Welcome to the Stock Market Daily News Podcast. It's December 25th, 2025. I'm here with your essential market update from Tuesday, December 24th. Yesterday's session saw the S&P 500 hit a new all-time high as stocks continued their year-end rally, while the Dow Jones finished just shy of a record and the Nasdaq added modest gains. Investors were upbeat on strong U.S. economic growth, but risk appetite shifted in other corners of the market. Today, I'll break down which sectors are leading, how crypto moves signal a change in risk sentiment, and why some traditional dividend stocks are quietly outperforming the market. Plus, we'll look at the surprising winners in mutual funds this year. Let's dive right in. First up, the S&P 500 closed at a record, bringing its year-to-date gain to 21%. The Dow inched higher and the Nasdaq jumped, led by gains in technology. Then holiday trading kept volumes light. What's fueling the rally? Strong U.S. growth data has investors betting on higher corporate earnings in the new year, even as some analysts raise caution flags around valuations and upcoming Fed decisions. For equity investors, the bullish momentum has pushed many indexes to fresh highs, though some warn profit-taking could emerge in the low-volume environment. Meanwhile, the crypto market told a sharply different story. Bitcoin fell to around $86,900, down more than 1%, failing for the third day to hold above the key 90,000 mark. Ether dropped 1.5%, while Solana sank nearly 3%. The entire crypto space lost value and failed to mirror record rallies in equities as investors pulled nearly $1 billion out of crypto funds last week. Risk aversion is rising, and flows suggest some traders are looking for safety, potentially a sign to keep a close eye on high beta holdings. In the world of mutual funds, multi-asset allocation funds have been standout performers in India, beating pure equity funds with an average return of 16.1% this year. What's driving these gains? The sharp rally in gold and silver. Gold surged 76% and silver soared 138% in rupee terms. These funds, which split money among equities, bonds, and precious metals, offered built-in diversification. For retail investors looking for automatic asset allocation and risk control, the results highlight the value of not going all in on a single asset class. Now for some individual stock highlights. Healthcare's steady giants, known as dividend kings, quietly outpaced the broader market this year. AbbVie jumped 29% year-to-date as growing revenues from immunology and neuroscience offset declines in its older drug Humira. The company also raised its dividend for a 54th consecutive year, offering a healthy 3% yield and a recently improved earnings outlook for next year. Meanwhile, Johnson & Johnson also delivered strong results, growing operational sales more than 5% and boosting annual EPS guidance. Its 60-year streak of dividend hikes and stable medtech business helped sustain gains and draw income-focused investors through market volatility. To wrap up, the S&P 500 closed at a record, with the Dow and Nasdaq also ending higher. The big themes? Investors cheered U.S. growth data, but shifting risk sentiment weighed on crypto and other speculative assets. Diversification paid off in mutual funds, while tried-and-true dividend stocks delivered quietly impressive gains. Looking ahead, keep an eye on holiday-shortened trading, upcoming earnings, and next week's economic data releases, including jobless claims and early January manufacturing numbers. Don't forget to subscribe and follow us for your daily market briefing. Happy holidays and successful investing!